following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition, the last Monday of April. And we're looking at Monday, April the 28th. My pleasure to be here Monday through Friday, every market day. And 11 o'clock till noon. And you heard the number to call. It's 877-927-6648. And international numbers, we'll try it here. International numbers, 727-445-1044. 1044. He sounds like a tax form. The old 1044. And thank you, Steve Rhodes, for a great 2 hours. Much appreciated. And even more importantly, we have programming here all the way through until 6 o'clock this evening when Tom O'Brien. Don't forget, I don't know if it's still up, but if it's still up, remember, Tiger Dollars is the last second that you can get it. Tiger Dollars, your 20 to 25% bonus for signing up and getting a kind of an account, not account, it is an account that allows you at any point, whoever you like, you're listening to a show and you say, hey, that person's doing exactly what I like to do, or I want to do, or I've listened to that person before, and they give really good advice, or at least advice in the area that I'm looking at. I'd like to subscribe. And this is just, that's it. I mean, I think, in fact, it might even be over. So you're lucky if you can get it. Now, here's the key. In this market, look, the Dow right now is up, just a moment ago, it was up 139. The Dow was down 140 on Friday. Remember, ugly day, everywhere you turned, everyone was talking about 90. Anybody saying anything here? We've just gotten back that. One of the things I spent almost every free minute, not every free hour, but every free minute over the weekend, since actually Friday, from Friday when I finished my show, I went through so many different charts, indexes, sentiment indicators, whole bunch of things. And my conclusion is that, first of all, even if the Dow was to make a new recovery high, there is enough evidence to say that there's a good chance that in May we will start to see lower highs and lower lows. That's number one. Number two, there is enough reinforcement at this particular point to at least have some kind of a high-level consolidation into the end of the month. That is into Wednesday. At least that's the way it's looking. Third thing that I spend a lot of time on, I mentioned to my subscribers, that's to the opening call. It's my daily service, a very comprehensive service where I look at all the different indexes, the key whatever it is that I think is important. And every day we're looking at the Dow, the diamonds, the S&P, the SPY, the Qs. I give parameters for all of these, the GLD, uptrend, downtrend, what we're looking at, where support, dollar, etc. So it's a very comprehensive newsletter. Most importantly, I spent the weekend, I showed a whole bunch of charts. For instance, I'm going to bring this up just for now because I'm thinking about it. I better do everything as I'm thinking about it today because my head is just full of all these different aspects that I was looking at over the weekend. And look, here is Amazon. I had a caller who wanted to go short or was short, and I said, great, because this is what I'm looking at. I'm looking at April, round about the second or third week of April. I have a time measurement here in Amazon. Let me just go to Amazon itself so that I can talk to you about it. AMZN. And I said there was a left side, right side price time match. And that price time match said that we should go to, and there it is, 296.50 would be my left side, right side price time match, and that should come in the week of, right there, the week of the first week of May. And actually what happens is this is, the way this is calculated on TradeStation, it is the week before that goes into the next week. So that gives you right there into the first week of May. So this is the first week of May. because we could be there by Thursday, right? So we hit it exactly. Then I mentioned that there was a very strong uptrend line. What's an uptrend? It's just a single line where you, depending on the technique you use, I use the outer wick of candles. I know a lot of people use the body of candles. To tell you the truth, I really couldn't care what you use. As long as whatever you use it consistently. Why? Because you will learn over a period of time that this is the one that really works. And if it works for you, I'm not the one to go and say, wrong. I remember when I came here and I was studying clarinet with the principal clarinet of the Boston Symphony, and he came up and I guess he had some kind of a deal with a different manufacturer of clarinets, and he said, oh, no, you really need to get this kind of clarinet. And I remember at the time thinking, I don't know how much difference it would make. The sound is in your ear, etc. So the technique that you use should be a technique that is viable and robust enough to be able to take in all these other considerations. So look what happened. We've made the apex of the Chapman wave inside wedge down, a down target. That's the pink dashed line. You've got the right side, left side price time match. You've got the uptrend line, and it's saying that Amazon had better hold because the technique that I use of the arch formation or the H formation, it's the same technique basically, is that the bar that takes out the left side support better come right back, that bar or the next bar. That is a weekly chart. So this bar, which made a low today, broke to a lower low of round number 288. Let me type that in so we've got it there in print, 288, and I'll put round number, but I can't put down whether it's a low or not. I can just put it down in blue. And that says, get rid of the 302.71. We took it out. This is a very important moment right now for Amazon. Why? Because if next week it goes even lower and it fails to bounce back into the range of 296.50, but instead goes lower down, I have no choice but to look at the next level of support, which would be the low of 279.33. That would be absolutely imperative to hold. So we're within 10 points of establishing at least a tradable low or just breaking down. The monthly chart says, you've got that pattern, the Eiffel Tower pattern that says straight up, straight down. Be careful because that's that capital A pattern. And this one usually doesn't stop until it hits a major support level, and there actually isn't one until that trend line at 266 or 265 is hit. So if it happens before then, that's very positive. So we're watching Apple. Now there's another technique that I discussed in my work. I call it the Chapman wave trend gauge. What is it? Basically, Richard Arms did all the work. It's called the Arms Index. It's a calculation, high, low, minus. Let's put it this way. It is one of those calculations that gives you a result. I don't really care about the technique that gets you the result. I'm only interested in the result. And my technique over the many years, and this has got a success rate now, I think it's only missed once in the last year. Let's call it 3 times that it's missed. So it's got a success rate up in the high 90% area. And what it said is that within 1 to 2 days, and people ask me all the time, what are the numbers that you look at? And this is the only technique where I'm not giving out numbers. All my other techniques, they're out there. They were proprietary. I use them now, and I teach them. I think it's very important to be an educator in this business. It's tough enough as it is. So this is one I'm keeping to myself. Why? Because I have spent a lot of time, a lot of effort, and certainly a lot of money in developing it. I'm not going to just give out that number and say, hey, here's the number, everybody. I did all the work, but whew, no problem. There's a number. Why? Because the number can change. And you might not be there when I learn that the number is changed. I've changed it over the years slightly, just like I did with the VIX index. And I just don't want to give out a number that could change. Then someone comes back and says, hey, you always said 29 or whatever the number is. And now you're using 22. Well, you weren't there when I changed it from 29 to 22. In this case, this is the number. Well, it worked 100% today. And what does it say? It says that within 1 to 2 sessions, the S&P, this is very unusual. Usually my indicators are based on other things, but this is the S&P futures should rally 7 to 9 points, 7 plus 7 to a plus 9. And that should lead to a cash run to the upside of about the same proportion. It should be a strong one. And then it's done. You know, like I have my stalk leg formation. When the beak is finished, I always say after that finishes a very strong rally, and then you're done. I don't know where it's going to. I just know anything. I just know that that's the pattern. Well, the pattern here in the flat base Chapman wave restart, I just haven't had time. I've done the work. I just haven't time to put together a few charts that I want to send out to my Master Trader folks from the last Master Trader series that I promised you I would do on certain patterns that we looked at, but we were so busy we ran out of time for me to send them to you. I will send them to you in the next couple of days. I wanted to do this work that I wanted to do, that I spent time on for the weekend, so I will get it to you. I apologize for that. Now, the flat base restart, we saw that with IBM, the monthly chart. That's another technique that says if certain things happen, the result should lead to something else. Well, this has already done it. We've already got the Dow up 139 points. The S&P was up over 12. The cash was up over 12. And the futures, this is so fascinating, have been quite successful, but have been failing all day. They're only up 3.50. Really a fascinating thing. Now the S&P, let me give you the numbers. The Dow's up 90. At 16,451. S&P's up 571 at 1869. The comp index is up 1. It's only up 1 at 4,076. That is one of the weakest sectors there. How's the IBB doing? Tried a rally before. IBB is now down 55 cents. Oh, man, at 223. Having such a tough time. That's the biotechs. You've got gold down 650. 1294. I took off my trade that I wanted us to have in the gold stock. We didn't get it at the price. It did run up. I'm actually not too interested right at this moment. By the end of the day, that's different. But I don't see it looking at this particular point. Silver is down 15 cents at 1956. Platinum is down 6 at 14.16. High grade copper is back at 3.12. It's down 30 cents. Had a very nice run, a really nice run. I mean, look at this. At HG, this is a continuous contract. Look at that. Whew, a little doji candle at, we don't know if that's an E or a B. I'm going to call it for now. I'm calling it an E/B. And we'll see what happens, because if it rallies a little further, what it needs to get to is at about 3.12. Let me give you the exact, so not everybody has a continuous contract. All it has to get to is, this is leg D in the daily of the contract itself. All it needs to get to is at 3.10. If it gets to 3.15, there's a good chance it's going to try to make a high for that whole cluster pattern back on the 5th of March at 3.23. And 3.21 is the 200-period exponential moving average. Long way to go. I'm just saying, so far, quite good action in high-grade copper. I'm kind of impressed. And the one other thing we'll do before we go to a break is, no, we'll do two things. Crude oil is down 0.08 at 100.52. Bonds are down 20, 30 seconds.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we've got a question here, which I think is a great question. It's a question on Netflix. If one was short Netflix, it's trading at $307.45, down $14.57. What would you do? Would you add right here? Would you wait for a bounce to the 200-period moving average back to the 335, 36, 37 area? What would you do? Well, there are a couple of things. Number one is when the trend has changed, and it's really, I remind myself here, I should get that out because I love that chart of the trends that I have on my CD. CD for trend. Let me see if I can even remember to look down at the page by the time the next break comes. When the trend has changed, and I do believe that for Netflix the trend has changed at least in the short to intermediate term. I'm looking at a monthly chart now. I have to wait for the month to finish, but it appears that the monthly, the top that was made at round number 458 3 months ago is going to be. Was it 3 months ago or last month? It's going to remain in place. And a peak G, a rare peak G in the weekly says that it's taken out the A pattern. Remember, I always talk about this Eiffel Tower A pattern, straight up, straight down. Let me just draw it in there. A. I always put it into a little quotation there. I'll make it, let's make it black just to really show what I'm looking at here. And we're going to make it nice and big. Make it 48 pica. There you are. So there you are. Look at that. That's exactly the pattern right there. Straight up, straight down, the A pattern. And it's taken out the left side low twice now. The first time it bounced back. Remember, that's exactly the pattern that we look for. And that's going to say that the 119 level is going to be absolutely important to hold. Well, it hasn't held yet, but the week has only just begun. So if it closes under that, you look at the left side trough of importance. That's the trough of the 1st of November at 309. Well, today's low is so far 307, round number 307. We're there now. Otherwise, I'd make more of it. But at 307.51, I don't know yet. Let me get a 120-minute. Could this reverse right now? It's very close to reversal. So let me just answer the question as succinctly as I can. Let me go to the 120-minute chart and show you something. I have no idea because you just asked me about this and I just picked it up. You see the trough, the low bar of at 1:30 in the afternoon of the 15th at 373.12.10. It went to a peak A. Now, the objective in the Chapman wave is to identify the lowest, most obvious low bar. Hey, that's it for sure. And then you merely count each successively higher peak. The moment you take out that peak by 1 penny, the next alphabet letter runs. So 339.97 was the high at 11:30 in the morning on the 16th. If you go to 323.37, that starts leg C. Well, lo and behold, it not only went there, it spiked right to 342 and went all the way into peak C at 1:30 in the afternoon. Funny how times repeat very often. 1:30 in the afternoon is 349.76. So now we're looking at C, parallel highs. They don't get counted unless you go 1 penny above. You don't go until it gaps up. That was news gapping up to the 380.88 level at 11:30. Oh, man, these prices, these time frames are just miraculous the way they repeat over and over. And then what happens? It stops dead under the 200-period moving average, and the stochastic turns down. The MACD makes an M formation, a right arm extension. The MACD doesn't turn around until afterwards. It makes a big U-turn, and then it plummets, and it goes trough A, trough works the same way on the way down. I'm sure that's a trough over there. Double check. 353 round number low, 353.07. That makes a trough because there's a penny higher. So that's B. Then that's, if you're looking at Tiger TV, I'm working on the 120-minute chart. And now it's going to a D, and the stochastic's at 1.72%. If ever there was weakness, that is it. So any bounce, this thing shouldn't hold any bounce and should come and retrace. But the bounce could be quite sharp. Now, I'm looking at this and I'm saying, in this particular bar of a left side, right side, oh, I love this. What a demonstration you're getting, folks. Here, this is like a lesson. This is on the way up. There's the plumb line. This is the plumb line right here. Whoops, plumb line. Exact. And I'm going to make a dash so you know exactly what I'm looking at. This is the plumb line right here. And you get a right side, left side price time match. And what does it do? It goes one bar later. I mean, in all these bars from the 15th till today in the 120-minute bar, that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 7, 8, 9, 30. 1, 2, 3, 30. About 32, 33 bars. Plop, it came down and broke it. It says that this bar had better close above the low of 312.10, and then it has a chance to at least bounce to the 9 EMA. I'll talk a little bit more about it when we get back. But in the meantime, I would not add to it. I'm going to explain why I wouldn't ride this moment. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Just looking at Siemens. This is the General Electric of Germany. SI is a symbol down 324, down 2.44%. I spent some time on this, not over the weekend, actually, a couple of days ago. And it looked like it had been making arch formations, and those arch formations were signaling that it was going on its way down to test 125. It says 129 right now. Peak D in the weekly and a peak D in the monthly, but still tremendous action. Just a high-level consolidation thus far. We're going to see. This is very important. Let's go to. I'll be back to Amazon in a moment, but I want to go to our first caller we've got is Ilke in Boston. Hi, Ilke. How are you?
Hi, Basil. Good morning. How are you?
I'm well, thank you.
So I have a question regarding Yahoo for you,
Yes.
and it's more of a guide me through Chapman wave when I'm looking at it. Okay.
Okay.
So I have been looking at this stock for a little while, just observing, not doing anything. I have not entered or done anything with it.
Okay.
And what I'm seeing is with this retrade, now I'm looking at all time frames, so actually monthly, weekly, daily.
So I've got, for anyone looking at Tiger TV, I've got all three up right now. In the monthly, it's made a peak E. In the daily, the weekly, it's made a G/C. Well, obviously now it's a G. It's not there's no C at all. This is a G. And in the daily, let me move this over so we can see a little clearer. It made a peak D with a beautiful, you remember the silent doji that I taught?
Yes.
That was the silent doji was right there on the day after it made the high at 40.15 on the 5th, on the 4th, It had a high of 39.98, just a tad lower than the previous one. So that's also the two-bar reversal technique. Then there was that sudden spike, which is like what I call the right arm extension or the rogue wave. But in this case, it turns out because it went to 39.94, and the high that we were looking at before was 40.15, this is like a right shoulder failure, and it made an H pattern and then came down and broke the left side low. So it's
How do you
doing
have it? Can you go back to the monthly? I'm sorry for a second because I couldn't see you.
Okay, let me get that right there. So here's the monthly, and I've got an A, okay, let me explain what I did in this particular case.
I still don't see your monthly.
Oh, you don't? Let me just...
okay, now I do.
Okay. All right. So here's the monthly, 8.94. Yahoo's low, Yahoo trading right now, 34.60, up 12 cents. But the low, significant low was on the 8th, the week in November the 28th, 2008. It went to 8.94. And then it ran up and it went to peak A, B, C. And, I didn't ever put that in. So the C was at 19.12. I'm looking at the monthly. That was in April of 2010, 19.12. And then it goes to 18.84. Now, the reason why I put a C minus, but I haven't updated it, what I meant to do was to go back and put in a C1 and a C2. This is clearly the second top, which was fractionally lower than the one in April of 2010. The one in May of 2011 had every requisite that you'd look for. It had a lower stochastic. The MACD did go higher, but then it turned down and went negative. And then what it did is it dropped sharply and went down to 11.09 in August of 2011. Then it started A, and I call that an A minus only because there was a fractionally lower A a little later on in June. So it goes A, B, C, D, and normally I would circle the the D with as if it was a potential instant restart. But in this case, because you remember how I teach about the fast-moving average, that if in the MACD, as long as it's holding really strongly, I'm inclined to think that you're only going to go to an E or an F. You could even go to a G, but there's probably not going to be an instant restart. So it goes to D, and then it goes to E at 41.72, and that is January of 2014.
Okay, so what I did actually is your C that you have before the D,
I actually...
The last C that you have.
I got that. That was at May of 2013. Yep.
Yeah, I actually made it as a continuous to C2 and called that a D, and then my D is an A, and an E is a B.
But either way, you remember, Ilka, you got no choice. That where I've got a D, you would have an E, but it's going to be E/A.
That's correct.
And then it goes F/B.
That's correct.
And the MACD's fast-moving average is still very strong, but the prices pull back, and so this is a reason to say Yahoo still has inner strength. It's not saying Yahoo can go to an all-time high. All it's saying is Yahoo has inner strength. Let me explain what I'm looking at for those folks who are a little mystified as to why it seems so clear it could pull back. If you look at the MACD, I'm moving it over right now. It will take a little time to show up. But if you're looking at this monthly chart of the continuous silver contract, you remember I made a big deal when the price plummeted in silver from the high of April of 2011. I've got 50.66. It'll be different. It's a continuous contract, so that price change because it gets smoothed out. But the high of May plummeted to the 9-period moving average of 35. That's $15 either way. Whatever technique you use, $15 from 50 is a pretty big percentage, right? And then what happened is you'd say, then the MACD should pull back, but it didn't. The MACD's fast-moving average, the red line was still rising, and the green line, which is the fast-moving average, was holding making the M pattern. But the price, instead of going to a new all-time high, because the stochastic was bad, all it did was it ran to just over a 50% retracement, stopped at 45.079, and then made the H pattern and broke down. Now, keep that in mind, and let's go back to your stock, which is Yahoo.
But at this point, look at this for what you just said. And I think on your stochastic, you also have is that an RSI or is that an OBV?
Oh, okay. The blue one is an OBV. On this is if I'm still looking at the continuous silver, right?
Yeah, there is a little difference, I think, of the spike in it and then collapsing under. But go ahead. So that's what I'm.
Okay, so now
that's
I just
where
want
my
to do
eye
exactly
goes.
the same thing, and we're going to go to Yahoo. You'll see that the unbalanced volume here is starting to make a lower high.
But it's making it flatter move, not making it
correct.
Okay, that's fine.
Yes.
I'm just saying that's the difference I'm seeing. Okay, go ahead.
This is the RSI where it changes to red above the 80% line, right? That little red one.
Yeah.
So the RSI, relative strength index, folks. This is the stock as it relates to the S&P, and it's the relative strength. I believe it's the S&P, whatever it is. It's the relative strength. It's core. The benchmark that it's going against, and in this particular instance it says that is fading, made an H pattern, went even lower. So the unbalance right now is negative. The relative strength is negative. Stochastic is at 80%. As long as it's at 80%, that's a positive sign. It is pulling back, but it's still positive. And the histogram is at 0.68, which is still positive. That's the MACD's histogram. And it's above the 9-period exponential moving average. So that's why I always say, think of your very short term, whatever you're trading, the shorter term is the rudder. And that rudder can suddenly turn, but it depends on the power and the current, whether or not you're going to make a V-shaped turn, or it's going to, or if it's a super tanker, that turn could take 20 miles to make a U-turn. Or let's say 7 miles or 8 miles. So there's a big difference. If you're in a little speedboat, you could make that turn in an instant. And that's why the monthly chart, you have to wait, because the rudder is the daily, and the daily is going to change the weekly, and then the weekly will change the monthly. So so now let's go, if you don't mind, I'd like to just look at weekly to show you something very interesting.
Yes, perfect. Very good.
The rule that I discussed, and what's so fascinating about these rules, I talk about them all the time, and then we watch them either in real time. I'll show you something right here. This is the 2-minute chart of the Dow, which I usually trade off that if I only have a very short period of time and I want to do some trading. And look, it's the same thing. When the H pattern
I don't
failed,
see your 2 minutes.
In the 2-minute chart of the E-mini, it broke down. It broke down. It's coming right now. You got it?
Yes.
Okay. So at 8:38 this morning, it broke the left side low. It didn't bounce back above that. And what it had to do is it made another little arch, and that one started the bounce back. So when you break the left side low bar, there are certain criteria. And in this particular instance, Yahoo did exactly what it should. It broke the left side low bar, and the very next bar turned around. And you can see that the second bar after that green bar, and it went back to test the 9-period moving average. And now that's failing. So you've gone from the H pattern to another potential little mini H pattern. Now, I know that this talk, right, about Alibaba. To tell the truth, I just keep hearing it, and I have no clue as to exactly what's going on. I should spend a little time. I just haven't bothered with it. But whatever the relationship is, it's saying that Yahoo has been basically held up by something, but it keeps making lower highs and lower lows. And until that pattern changes, until on the weekly chart, Yahoo decisively takes out 37.30, and it's trading at 34.55 right now, for a stock like this on a weekly pattern, that should not really be a problem. But it looks like it is a problem. And if it is a problem, it means it's following this H pattern that makes the 9-period moving average in the weekly chart a very strong resistance on a closing basis. The MACD is still turning down, and you finally had a turn in stochastic from under 20% to 27%, and it hasn't helped all that much. But we're just over 2 hours into the first day of the week, so this candle is really premature. We can just say if such and such happens, that's what could go on. In other words, if Yahoo takes out the low on the daily of 32.15,
Oh,
by
yeah. No.
give it
Yeah.
2 days, give it 2.5 days. Let's give it until Tuesday, Wednesday, until Wednesday at 3 o'clock or Thursday at 11 o'clock in the morning. If by that moment Yahoo has not bounced, not just nicely, but it's bounced over the candle of the 24th and gone to 34.78 or higher, if it's just stuck over here.
I agree with you on that one. Yes.
Okay, so what it's saying is
I was seeing actually, not today, because today I actually analyzed it over the weekend, and I was looking at it as a potential entry for a possible move higher. But that's what I said. I wasn't getting any confirmation even in the smaller time frames.
Now,
so I'm still watching. It's something that I think it has a potential, but my technicals are not helping me. So I'm not entering. I'm being a good
So here's a nice
right
and
now.
easy thing to do. Remember what I like to do? I like to make it, the technical analysis, as visually pleasing and as easy as possible. And when I look at this, I say, hey, the pattern of the arch formation is just everywhere in Yahoo. So I would grab the top of the candle of the, what was it, the 16th, 37.30, and I'd grab the bottom of the candle, doji candle, 2 doji candles, in fact, at 32.15. That was on the 11th. And I'd just draw a rectangle, and I'd say, wow, the best that I can expect from Yahoo is the H pattern goes to a lowercase h. I'll even draw it in so that we've got it for reference. I'll even put a data so that we can come back to it. And there it is. I would put it like this and like that. And then I'd say the best case is that there's another H pattern that's going to form, but something is saying that Yahoo is going to break and go into the 31s fairly soon. If it really cannot get to the 37.5, 38 level, the weight of evidence from the monthly and the weekly is saying the tide is pushing it down. So I'm looking at it. It's really more an intra-week trade, and what you would do is you'd buy it right here, 34.59, 34.06 is the 200-period moving average, and the moment it started to move it to 35.44, you say, great, now I'm raising my because it's going to fail, but I want to make an H pattern, and that can take it to the 36. And then you've got to be real careful, and if it starts to stall in the 36s, you can go short and think that it's going to go back down to test 34.06, and the next time it's probably going lower. And if it had to break below today's low, it says, I don't even have enough strength to make the M, that caterpillar M pattern. I'm going straight back down to test the 32.5 to 32 area. So far, the upside is extremely limited, and the downside is really an open book. It just might mean that Yahoo is one of those that has still has enough residual strength to say it can keep bouncing, but it's making lower highs and lower lows, and within that context, rallies are going to fail. My thinking right now, Yahoo is in a consolidation, and that it probably will test the 31 to 30 area over the coming 3-4 weeks. And maybe a little longer. I don't know. If it rallies more, it'll be longer. If it doesn't rally at all, it'll be shorter. And that's my assessment of Yahoo.
Wonderful. Thank you very, very much.
Good. Thank you so much for calling. I appreciate it.
Have a wonderful day.
And you too. Thank you. I'll be right back, folks. We've got another segment coming. I will be doing Larry's show this afternoon. I'll probably do, if I need to do it this week, I'll be doing it. But I will be leaving for the last segment of Larry's show. So I'm for the next hour. That's what I'm here for.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
I've also just 2 quick questions I had. Well, there were questions. I don't quick. The question was Ryland, Toll Brothers, 31. Okay, I just want to add IYR. I go together at this particular point because one is in commercial and the other are the home builders. Well, the IYR is trading at 69.19, up 8 cents. It's at an all-time high, I believe. Oh, no. A recovery high. Daily's in leg F, but still very strong. And that could have recycled, but I'm calling it F for now. The weekly is in E, and the MACD's good stochastic is at 85%, very good, making the cup and handle pattern, one of my favorite patterns, but it's got this, needs to break out decisively for me to be convinced about it. Hasn't broken above the former peak A- that was made on the week 26th of July of 2013 at 69.60. Very close, but it hasn't done that yet. And the monthly chart had a high of 66.21 back in May of 2013. Pullback to 61, call it a pullback. This is a pullback at 60.92 in August of 2013. Is now in leg A, B. It's in leg B in the monthly and still looking very good. I've liked that. I'm not sure I want to get in at this price unless you're talking about something that looks conservative, but I don't know how much further it's got to go. So it's looking very good, and it could go higher. It needs to break out. It needs to get to the 70.50 to the 71.30 area. At that point, that'll be very strong. So if it does that, it's saying, hey, in this rotational market, that's where I'm going. That's number one. Number two is looking at toll, and then support would be about 2 points low if it was really to pull back sharply from here. So the home builders come out 3.2%. I think I saw flash by. Anyways, it was a good number. There was a pop-up, and what happened is that toll was just at 34.48, 35.10 the high of the 4th of April, and then today's high is 35.10. So 35.10, 35.10. It's made a double. Let me just take down here from the 1, 2, 4, 7, 6, 10. Okay, just had to get that number there. So what we're looking at is toll is failing. It looked like it was going to rally, but it's failing. Peak E in the weekly, peak D in maybe this month. The next 2 days it doesn't break to a higher high, which it's impossible to do. 39.95. The whole index couldn't jump 5 points. I couldn't see that. So, yeah, peak D in the monthly with weakening technicals. Now, what I'm doing now is I'm looking at Lennar to see if it, too, is doing the same thing. And it is. It spiked to the upside to 40.6, and it's now trading at 39.05. So how stocks the next 2 days is going to be really important. I think they've made some kind of a top, some kind of importance here, and it's going to be interesting to see if they go on any further upside action. Now, I just wanted to tell you something. Boston, this is from the Boston Globe. April of 2013, 55 Commonwealth Avenue set a record for the most expensive residence sold in the neighborhood. This is in the Back Bay. This is the prime area near the Commons. Built in 1875, couple relocating from Dedham. The 9,578 square foot dwelling went through several transformations from lodging house to apartments, reverting back to single family in 1991. So this is very interesting because 14 million back in 1970, 71, 73, that era, you could have got for that price probably probably about 10 buildings, maybe more. Maybe, no, what 10 buildings? About 20 buildings. So this would be an interesting period. And I want to talk a little bit about that. I want to talk about the biotech emergence here at Kendall Square in Massachusetts. And in the next hour, in Larry Pesavento's show. The Dow is only up 43, so he's now gone negative. I'll be back for the next hour, for the 40 minutes in Larry's show. 50 minutes.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.